Good evening, everyone.
Good
So,
evening, sir.
yes, for a while, we haven't had some classes. It's because we've been working on certain things, right? We've been working on certain things that we want to make the classes different. We want to begin some new sessions, right? So there are certain things we've been working on that's been like that delayed the classes all the while. So we're about done now. We're almost done. So we're going to have classes resume again, and then it's going to be better. So we're going to make some announcements concerning that later on in the group for everybody to know, right? So thank you guys for coming. So with last class we had, was it the last class or one of the last classes we had, we talked about the M and W formations. And then the thing about the M and W formations, the thing about these formations generally is that we are looking to understand the market, right? We're looking to understand the market and be able to take advantage of sizable moves in the market. All right, so that's what we're looking for. And before we got into this M and W formation, we're talking about different types of traders. We're talking about traders that do intraday and those that trade, that take trades that are running into hundreds of pips. Okay, so now for you to be able to take trades that run into hundreds of pips, there are certain formations. That's where these formations come in. There are several other formations. This is the first we discussed the other time. We want to just refresh on this one. And then in subsequent classes, we're going to be moving into other formations, right? So now that's why you want to understand these formations. So the formations help you to know the flow of the market per time. How is this market flowing? What is it going to do? What is it about to do? What has it done? You see, what has it done? What is it about to do? All of that is what these formations help you to play out. You know how far the market will move. I'm going to go into certain charts not too long from now so that we can see these things move. So this is not going to be the last class we had. We did a lot of explanation on the formations and everything. Now we're going to go into the charts where we are going to be looking at these formations and how they actually did play out with certain currency pairs and all of that in the market. But first of all, the thing you want to understand, like we've always said, is first of all, you want to know the trend. You want to understand the trend in the market. What is the trend? Is this in an uptrend? Is it an uptrend? Is it an uptrend or is it a downtrend? Is it a sideways trend? Where are we in the market right now for these particular instruments that I'm trading? Where are we in the market right now? Okay, so how far are we going to go? For example, you might get into you might come to the chart and then you are doing analysis and you realize that price is in an uptrend. Okay, now that uptrend that you have realized, how far is it going to go? How far is it going to continue? How far is it likely to continue? Okay, that would determine that would determine your entry on that trade. For example, let me look at this quickly. Like I said, we are going to go into the charts. We're going to go into the charts. Now, look at this. Look at this. This is USD JPY, right? This is USD JPY. You will notice right now, you will notice something. Let me draw something. Look at this. You will notice that this is a W formation. Okay, so now if this is a W formation, usually what's going to happen is that it will form a complete W. It will form a complete W, right? Now, from what you can see we had the left leg of the W here. Then we had the middle leg. We had another middle leg. Now we are on the last leg. Now, if you come to this chart, let's look at something now. If you come to this chart and you want to enter now, okay, let me add another. Okay, let me see. Can I shift this? Hold on, guys. Okay, good. Now you can see how the W pattern, from the pattern we are seeing right now, you can see that this is likely where price is going to terminate. to complete the W pattern. This is where price is likely going to terminate. Now, will it make sense for you to come to this chart right now and start buying? This is what I mean when I say how far is price likely to go. For example, when this formation started and this leg here went up here, it was clear for those who were trading this thing, it was clear that this is going to be a W pattern. So if you were to enter somewhere around here, let's say this, you were not so sure, you entered, then you saw this form and then this formed, or somewhere here, and you entered somewhere around here, and you were entering somewhere around here for this buy, that will make a lot of sense. That will make a lot of sense. But now, if you are entering this trade at the point where it is now to buy, what are you doing? It means that you're not understanding what is happening in the market. You're not understanding. You see where these patterns are so important? These patterns are so important. Now, you could look at this and say, oh, I still expect it to buy to so and so. Or maybe you go to your lower time frame. Okay, let's check that and see what we see. Let's say you are trading on the 15-minute chart. Let's say you're trading on the 15-minute chart, and then you are not even looking at all these other things. Let's say this resistance up here is not even here. You're just looking, you're thinking, okay, I need to enter this, I need to buy, I need to buy. How are you going to know how far? Then suddenly you will see that price will come to this place. You see that price can come to this place now. You see that price can come to this place, right? And then maybe make a massive sell here. And you're wondering what happened there. And maybe it happened when there was no news at all. No news at all. So you're wondering what happened. Why did price fall from there? Why did price reverse from there? It reversed according to technical analysis. So those who were following the price patterns, those who were following the market structure, price patterns, and all of that, you'll be able to see that, okay, price is about to terminate around here. If I were on a trade, for those who entered this trade since, their goal is they're going to bail out here. They're going to be closing their trades and taking profit around here. That's what's going on. Okay, they're going to be closing their trades and taking the profit. So I cannot be the one who is entering to be buying around there and hoping that something happens. You see, that's one thing. So now let's go forward. That's just an example of how patterns in the market, understanding patterns can help save you, can help you know how far a price is going to go. Now you can come into the chart, like I said, you come in and then you see that price is already buying. Is already buying or is already selling. Now, let me show you guys something else. Let's go to USD-CAD. Let's go to USD-CAD. Now, look at this USD-CAD. Look at this USD-CAD. So I want to show you these things are happening all the time. Look at this USD-CAD. Look at this. This was the start of something. It went up here to this area, did this, and then came all the way here. You see how this is what you call an M structure. You see how perfect the M structure is, how it went and how it terminated. How it went and how it terminated. You see? So now when you look at this, if you were on a sell here, you will likely know when I saw this sell happening, I think it was somewhere still around here. I don't remember where it was. I saw this and I said, this is where I'm going to enter the trade. This is, I think I already saw it when it was already coming down something, but I knew what was going to happen here. I think I had a pending order on this trade, on a buy. I just said, I just said to myself, what's going to happen is that price is going to terminate here and then a buy is going to happen. Now, I may not know how far that buy is going to go, but I know that this M structure is going to close here. It's going to terminate here. And once it terminates here, that means it's going to reverse. At least in some cases, if this reversal is not complete, you can see now this reversal was really massive. Now, if this reversal doesn't happen like that, you will first of all see a sizable reversal here. It has reversal maybe 50 pips, maybe 100 pips and all. Then if it's going to keep coming down before it will now come and break out of here. That's when it will now come and break out of here. Until you see that, until you first of all, you can enter here. You can just look at this trade now and say, you know what, when price gets here, I'm going to place a pending order there for a buy. No matter what, you will first of all see a buy that will put a lot of money in your pocket at that area. Why? Because you know, you can see the pattern formation. You can see the pattern that has formed. You can see the structure that has formed. You can see this is a complete M structure. Now, it is not all the time that these structures complete. It is not all the time. I'll show you another one on this same chart right now, where the structure did not complete per se. What you would have expected to happen did not complete per se. But then, if you were trading it, you would have still made good profit from it. You see? So let's look at that. Let's look at that. Okay. So look at this now. Look at this, look at this formation here. So let me show you what happened here. Now look at this. This was the last leg of the M structure we talked about before. The last leg of the M structure we talked about before. But can you see what formed here? Look at this. So which means that as an M structure was completing, a W structure started. As an M structure finished, a W pattern started. So look at the W pattern now. It kept going, kept going, kept going. Now, based on where this W pattern started from, look at it here, based on where this W pattern started from, you would have expected that price is likely to terminate around here, somewhere around here, because that's around where the W pattern started. That's exactly where the W pattern started. Look at it here. So this W pattern was the last leg. Can you hear me, please?
Yes, I can.
Okay. So that's the last leg of the W structure, right? Of the M structure. Now that became the first leg of the W structure. So now you would have expected that this buy will go all the way to this top, but it didn't go all the way to this top. It started pulling back. But would you agree with me? Won't you agree with me that from this point where you can see this structure forming, and then if you were to enter this trade from this area, just from here, if your entry was somewhere around here, after you see that, okay, this formation has happened, this is most likely going to be a W structure already. This leg, one leg, you have seen one leg form. You have seen the middle one, this one, you've seen the middle one, you've seen price go like this, you already can see that W is forming. Even when you that's listening to me now, when you want to draw a W, is it not how you draw it? You will draw the first leg to the left, then you draw the two double legs, which is this one. You draw this one, then you draw this, before eventually you go up. So from here now, you can see that even if you enter just around here and you enter this trade and started going up, you would have still made a substantial profit from there. That is how many pips? That's still 140 pips. You would have made that one. You would have made that one. Now, the thing is that this reversal that started from here now, one thing you know is that when you trade, we talk about confluence. We talk about confirmations. We talk about a whole lot of things, right? When you come into the market, the reason why we learn so many different things is so that we can put them together to be able to perform better in the market. So that we can put them together to be able to perform better in the market, right? Now, this termination here, this place now where price started reversing back, I can draw maybe a Fibonacci retracement there, and you will see probably why price started coming down from here. So what I'm trying to say is that you, as you're trading, you want to put different things together. One is showing you where price is going. Another thing is showing you the trend. Another thing is showing you points of reversal. All of those things, when you put them together, you start to make sense. You start to make sense on a consistent basis from the market, of the market. Even currently right now, what's happening? This is USD this is USD CAD. What's happening right now? If we study, you discover a pattern is forming from here. A pattern is forming from here. right? Now, sometimes the patterns will be this perfect. Oh, just go up and it does this. Perfect. Sometimes it's not that perfect. Okay? You discover that this one now, even though it's a W pattern, clearly a W pattern, it didn't give you the two bottoms were not the same. The two bottoms were not the same. And the truth is that that's how it is. Even you, when you want to write W's, the two bottoms are usually not the same all the time. Sometimes they're the same, sometimes they're not the same. So what you are looking for is not a perfect structure. What you are looking for is a good representation of the structure you are looking for. What is the complete, what is a proper representation of the structure that I'm looking for? That's what you want. Not perfect. Sometimes it will be a perfect W that's sitting on the same both points here are sitting on the same level. Sometimes it will be like this. Both of them are not sitting on the same level. That's not your problem. That's not your problem at all. Your problem is, have I identified what is going on? Once I have identified what is going on, then I take advantage of it. I may not write the whole thing. For example, if you were trading this M structure, you may not write this from this top all the way to this area. No, maybe you would have, as you're going, maybe it's after it has come down to this area that you start to notice that, oh, it's an M structure that is forming like this. Oh, right? Maybe your entry will not be around here. Your entry is now somewhere around here after the break of this area, right? After the breakout of this area, you see, price is coming from this top. Maybe after the breakout of this area is when you'll be like, okay, let me now enter. I believe it's going to move from here to this bottom here. Okay, so by the time you enter at that place and you just enter for a sell around there, this is 100 and this is 210 pips or 200 pips. Now, if you took 100 pips from that, isn't that a substantial amount of money depending on the lot size you're using? Even if you just said, okay, I will enter this trade, from that top to that bottom is going to be 200 pips. But for me, I'm not interested in 200. I will take 100 or I will take 150. You will get your take profit hit very easily and you get out of there. So this is the reason why you see these formations happen over and over and over and over again. And then we just have to pick certain instruments or certain instruments, certain assets, certain currencies. We pick them and we just focus and watch what is going on per time. We watch what's going on per time. I showed you USD JPY before. That one now is about terminating. You can see it's already terminating. This is the W structure right here. Look at it. Look at it. It's already terminating. This is the termination. So after it terminates here right now, you can decide to enter for a sell there. Now, it is possible that price is going to break out, but I will assure you that it will not break out immediately. It won't break out immediately. Price must respect that zone because this zone you are seeing right here is a daily zone. It's actually a daily resistance. Look at it. That's a daily zone. Very solid daily zone. Can you see? That's a very solid daily zone. Daily chart zone. That's a solid zone there on the daily chart. That's actually the number 4 touch right now. So if price gets there, there's no way price will go through that place as if it does not exist. It's not happening. There's no way price will go to that place as if it's not happening. Price will definitely respect that place. So if you enter for a sell there, you will make money. Now, I am not saying, for example, that price is going to reverse fully from there. It is possible it could reverse from there. It is possible it may break out. But in the meantime, you'll be able to get a good amount of the pips there. It may be 50 pips, maybe more. You get it out of there and you are done. You're out of there. You wait for it to reverse first. When it has reversed fully, that's when you can now decide that, okay, when it reverse fully, that's when you now decide that, okay, now I can take this thing and I can trade the reversal, the sell. I can trade it down because for now you don't know how far it's going to come down yet. But you know that since it's a very solid zone here, price is going to definitely respect it. But how far is it going to come? I don't really know yet. But here's what I would suspect. This is what I suspect. Let me show you what I suspect is going to happen. Okay, for me, I'm not going to be trading of this cell, this stop here, place a cell here. I'm not going to be doing that. But here's what I suspect is going to happen. Let's put a Fibonacci here and put it here. Take it to that top. So price is going to go to this top, get to this area. Why? Because we can see a W pattern. The W pattern we have to complete. A W pattern we have to complete. So this W pattern you can see is almost getting complete right now. It's almost getting complete. So when it completes, since we are at a solid daily resistance, price is going to come. Here is what I suspect price is going to do. This is my analysis of what price is going to do, right? Now, there's no guarantee that it's going to actually do that. But then it depends on how much reversal we see here that will determine whether it's going to do that. So the way you trade is this: you do your analysis and you wait for price to do certain things at certain areas. When price does it, it will now give you a reversal. For example, at this area right now, price is going to give us a reversal pattern. When price gives you a reversal pattern, most likely on a lower time frame, like 4 hour, this is a daily chart now, like 4 hour or 1 hour reversal pattern, then you know that, okay, I'm going to be able to get into a trade there. And most likely, here's what I suspect is going to happen. Price is going to sell from here to this area, to this 61.8 area here, before it goes back again if it's going to break it. That's what I suspect is going to happen. That price is going to come sell from here to this area here, this 135 area. I suspect price is going to sell from this area. This W pattern will complete. Price will now sell to this area here before going back up again. That is if it's going to go back up, right? That's what I suspect is going to happen. Okay, so now let's look at another pair. You see now? So that's area here. From here to this point is what I suspect. Price is going to most likely sell to that area before eventually reverses again and start going up, or whatever it does from there. That's not my business. But then if I see from tomorrow, after price gets to this area, once price starts to give me a pattern, a sell pattern here, a sell structure here, I know once price starts to give me a sell structure here, then I already know that price is likely to come back here. So I'll be looking for a sell opportunity there. Now, let me show you something that is likely to also happen in terms of W pattern and M pattern now. Okay, let me show you something that is likely to happen in terms of W and M pattern now. Okay, so let's watch this and see something. So this right here is one leg of a move, whatever that move is. This one leg of a move. Okay, so now let me show you another thing now. Now let's take our Fibonacci, put our Fibonacci here and do this. Okay, so now here's what I see. Price is likely going to come to this area, to around this Fibonacci here. Price is likely going to bounce off of this Fibonacci here. Who is seeing the pattern for me right now? This is a pattern for me. Who is seeing the pattern? Who wants to show me, who wants to tell me the pattern you are seeing? Who is seeing the pattern for me? If price does exactly what I'm drawing now, who is telling me who can tell me what's happening now? If you can tell me, unmute yourself and tell me, what do you think? What do you see happening on the chart right now?
We envisage an M.
Exactly. That is what we are saying. That is what's likely to happen. This is what I'm expecting to happen. So price gets to this top resistance. This resistance that is here, that's very solid, right? It's a daily resistance, like we can see. I can tell you that if we go on a weekly chart, you will see that it's still a weekly resistance. Very strong, right? So price is not likely to break it. Price is not likely to break it. So what's likely to do is, you see the Fibonacci we drew now from here to here. Price is likely to come to this area, bounce off of this area, go back to this top, and then what's going to happen next? Very likely you are going to see price come all the way back to this area, this point, for the completion of the M structure. Can we see that? Now you can look at this and monitor how it plays out. And based on the opportunities you see, you enter. If tomorrow now price starts to come down here, like I said, I may not be trading in the night. Most times I don't like entering trades before going to bed, right? Because this is actually a good trade. As far as I'm concerned, I believe I can enter a trade on this area right now. I can enter this area where price terminates, I can enter. But one other reason why I may not enter is because it's a zone. It's a zone. Price may go beyond this area somehow before turning back. So since it's a zone, I may not jump in immediately. I will wait to see price action that's telling me price is reversing. So I will see that price action either on the 4 hour or on the daily chart. So where I'm going to be looking for opportunity on this is going to be tomorrow. So I want to see a reversal pattern. I want to see a reversal price action on this one tomorrow. Once I see a reversal price action tomorrow on this, what I'm going to be looking to do is my target for a sell is to sell somewhere where I get a trade, maybe somewhere around here where I get a trade. And this is the destination. This is going to be my destination. Once I get to this area or close to this area, I exit my trade. I wait because price is definitely going to respect this. Once it respects this place, it's going back up. Now, it depends. It may not get to this exact top again. It may get there. It may not get there. Your only thing is that for you to watch what's going on. At any point, maybe there's a trend line. Let's see if there's a trend line. If there's a trend line, sometimes you might see that a trend line is what prevents price from getting to where it needs to get to. Okay, there's even no trend line at this time. There's no trend line. So price is likely to go back to this top before coming down to this again. So this is a potential M structure we are looking at. This is a potential M structure we are looking at, right? Let me check. I think I saw one thing on USD CAD. Good. Okay. Who is seeing this thing? So this is just showing you guys, this is showing you that this thing is not happening only on one instrument. I can show you one. There's another one I traded on GJ. I traded on GJ, I think last week or so. Or was it earlier this week? No, it was last week. Okay, now look at this. This is Euro CAD. What are you looking at here? What are we seeing? Look at it again. Look at it. Look at it. Look at it. It terminated here. Once it terminated, what happened? It bounced off. It bounced off. You see what I said? It bounced off before breaking out. Now it has broken out, it's coming down, it's continuing down. But you can see that it respected it very heavily. In fact, it came there once, it came there twice, it came there 3 times before eventually breaking out. So you can see how this one is a perfect M structure, perfect M. Perfect. This is USD CAD. I traded something like this on USD JPY, on GBP JPY last week. I think I also saw another one on, was it AUD JPY or something like that? Okay, this one was a smaller M structure. This one wasn't a big one. This one was a smaller M, and this one was not complete. See what I mean? See what I mean? This is another one. This one, I was expecting it to get to this point, but it didn't get there. Just like that USD CAD we saw before. You see? But then it still played out. Then look at GBP JPY. GBP JPY is the same thing too. Okay. You see this over and over. So what is your rule now as a trader? What is your rule now as a trader? Your rule now as a trader is to keep your eyes open and monitor what's going on. Look at this. This one was so sweet. This one was so sweet. I got into it somewhere around here. This one was so sweet. This one did over 200 pips. And it completed the the M pattern structure. It completed it very well. Right? Completed it very well. And guess what happened? That's why I said we use different things. If you look at this right now, if you look at this, let's take a Fibonacci and do something. I want to show you that you could have actually seen the whole thing that happened here. Now, when we take a Fibonacci and draw this now from here to here, you will notice that the 61.8 is exactly where price has reversed from. The 61.8 is exactly where it completed, where this inside M structure right here, That's where it completed. It completed inside the 61.8, and then from there, it resumed the initial pattern, which is this one, and then it's been buying all the way. Can you see this? Massive buy, massive buy. Look at it. Massive buy from this Fibonacci all the way. You can see. That's how much? 400 pips. 400 pips. So this is how you enter the market and you are catching mind-blowing pips. This is how you get mind-blowing pips, by following what is going on. Big picture. Give yourself big picture. Now, if you are looking the way I'm looking, I'm equally seeing some kind of a W pattern here. Are you seeing this? This is also a W pattern again. Are you seeing this? That's another W pattern. And these things are so, when you get to understand it very well, what you start to see is that you will begin to see them with your eyes. You'll just be seeing them with your eyes. Oh, this is what's likely to happen. Oh, this is what's likely to happen. So look at this one now. In this one now, this is GBP JPY. You can see that there was an M structure inside a W structure. There was an M structure inside the W structure. So the M structure started from here. It started from here. It completed here. And then the W pattern continued. The W pattern was already here. The M structure started there, completed, then took the W pattern all the way back up again. This is really interesting. This is interesting. So it is what we need to look at, guys. It's what we need to look at, and just look at. When you look at it with your eyes, you start to monitor, observe it. Observe it mostly on the 1 hour, 4 hour chart. Mostly on the 4 hour chart. Now, the reason why I like to look at this from the 4 hour chart and sometimes on the daily chart. Now, when you look at whatever happens on the 4 hour chart, right? Go to the daily chart, you will see that most likely you will see exactly the same thing. So even if you're not looking at daily and you're thinking, okay, that's too far, even if you're not looking at daily, you can be looking at 4 hour, you will be seeing the same thing. You'll be seeing the same thing. So when you look at it on like a 4 hour chart, and you can see this on the 1 hour chart as well. But when you look at it on the 1 hour chart, or you look at it on the 4 hour chart, which is a longer time frame, you begin to be able to catch this move. When I saw this move happen here, I saw it. I knew that price was going to come here. I just knew. I knew that price was going to come here, and then it came down there. Just within, I would say within 24 hours, price fell from this top to this point. Within 24 hours. And that was well over 200 pips, I think. Well over 200. You see, that was around 250 pips. So I could see that already. So what that does for you is that you are able to project into the future and say, okay, this is how much I want to. Now, if you know, this is how much pips I want to catch. Now, if you know that price is going to sell from this top all the way to the bottom for 250 pips, what are you going to do? So that tells you that, hey, this trade is not a 20 pips trade. This trade is not a 30 pips trade. This trader can afford to take 100, 150. Now, you may not take the entire 250. I agree. Yes, you may not be greedy and say, okay, I want to take the entire 250, right? Because something can happen in the market. But then when you see a 250 potential 250 move, 250 pip move, at least you know that 150 will definitely come out of it. You know that you can take 150 from it and rest and sleep well, and know that, okay, I'm not expecting the market to reverse against me. At least I know that 150 will come out of it. So that's the point. How do you decide that, okay, I want to, and those massive pips, 100 pips, 200 pips, that's how you grow accounts. That's how you make a lot of money. Now, if you are able to if you are using a good lot size, and you are able to catch a massive move on top of that, it won't be long before you start making thousands of dollars. It won't be long. Even if you're using 0.1 or 0.05, by the time you are catching 200 pips, you will discover that your 0.05 begins to become something big. Yeah. Excuse me. You see that your 0.05, your 0.03, your 0.05 starts to become something when you take 150 pips, when you take 200 pips. You see? So that's the reason why you want to monitor this, understand this very well, and be able to take advantage of it and watch it, see it. What you need to do now is this, guys. Go into the chart, look for these patterns, because when you are looking for them, you will begin to see them. You begin to see them early. Because when you see it early, that's the beautiful part of it. You see one leg. Let's say in this case now, you see you see the one leg of an M forming already. This M. You see one leg. You see this. You see this. Usually, you start to notice it from around here. Once you start noticing it from around here, this entire move now, you are able to position yourself quietly, early enough, and you enter. So when you enter, you will see that if it's 100 pips as your target, that way you will do that very easily. 150 pips, very easy. You are out of the market. Now you may catch everything, you may catch as much as you want to catch, and before you know, you see very good profits. Okay. All right. So now I'm going to ask questions. I'm going to let you guys ask questions.